Before we begin, please support the channel by subscribing, liking, and sharing this video. Constructive discussion is always welcome, and we invite you to share your views and insights in the comments. August 20, 2026, Daily Market Briefing and Technical Breakdown. This video presents a direct informational narration of the source document. We have 5 main sections to cover today. We'll start with the crypto market short squeeze, then move into geopolitics and macro pressures. After that, we'll look at retail and market index technicals, followed by upcoming volatility and catalysts, and finally, sector-specific corporate updates. Section 1. Crypto Market Short Squeeze. So the data shows an incredibly aggressive rebound in Bitcoin, with prices suddenly surging right up to $73,000. And, this didn't just move the market, it triggered a massive cascade of liquidations. We're looking at a staggering $3.3 billion wiped out, with exactly $3 billion of that total coming strictly from squeezed short positions. There's a huge human impact behind those numbers, too. In just 24 hours, over 180,000 individual traders were liquidated. According to the source document, this marks the absolute largest short liquidation event the market has seen since 2021. So what's actually fueling this momentum? Well, the source points to 2 massive regulatory catalysts. First, former President Trump's recent push for favorable legislation after meeting with crypto executives. Right alongside that, the SEC just passed plans allowing certain digital assets to completely bypass standard securities registration, which is creating a highly anticipated, friendly regulatory environment. Looking at the technicals, Bitcoin is currently testing core resistance right at $73,270. Breaking and holding that specific level is absolutely critical for confirming a broader trend reversal. On the flip side, we need to keep an eye on key support all the way down at $17,265. Defending that baseline is essential to maintain the current bullish daily structure. And naturally, this momentum has sparked a broader rally across crypto-related equities. The single-day gains here are significant. We saw MicroStrategy shoot up by 7.8%, Coinbase climbed 7.6%, and Circle rose by 6.45%, with all of them riding the wave of the underlying asset's massive squeeze. Moving on to Section 2, Geopolitics and Macro Pressures. Zooming out to the macroeconomic environment, the source notes a pretty staggering milestone. The U.S. national debt has officially broken the $4 trillion mark. The sheer scale of this severely blunts the Treasury's buyback effects. That means any positive spillover into global bond markets is highly limited, which ultimately keeps structural inflation stubbornly sticky. At the same time, geopolitical tensions are escalating. Trump recently issued a really stark declaration, stating that any country allowing its financial institutions, enterprises, or government entities to provide support to Iran will face immense economic consequences. This signals a sharp shift toward unprecedented, strict economic sanctions. Because of these shifting geopolitical dynamics, international oil prices have rebounded, and that directly increases inflationary pressure. However, the source indicates that the $100 price level is acting as a strict red line. Basically, as long as oil remains below $100, extreme geopolitical pressure tactics can safely continue without forcing an immediate policy pivot. Now for Section 3, Retail and Market Index Technicals. Right now, we're seeing some notable pressure coming from retail giants. Even though Walmart reported strong Q2 e-commerce growth and robust membership scaling, their shares actually dropped sharply by 9%. The crucial point to understand here is the domestic consumer data. U.S. same-store sales grew by a mere 0.6%. That's a multi-year low, and it signals profound caution among U.S. consumers. That consumer caution is bleeding directly into broader market indices, with the QQQ suffering 5 consecutive down days. Institutional traders are eyeing a key pivot battleground right at the 700 level. If that 700 mark is lost, the next major support zone sits between 680 and 660. That's an area where heavy put selling suggests traders are willing to catch the falling index. The technical breakdown of the S&P 500 is equally complex. The index closed at 7641, critically losing its 7720 mid-rail. Looking ahead, the source identifies 7700 as the maximum resistance level, while the most significant downside protection comes from a massive put wall sitting directly at 7600. But we have to be incredibly careful here, because the market is currently operating in a negative gamma environment. By definition, in a negative gamma state, if a critical support level like 7600 is forcefully broken, it doesn't just result in a bounce. Instead, it triggers severe, cascading algorithmic selling that could quickly push the index down to the 7550 to 7500 major support zone. Which brings us to Section 4, Upcoming Volatility and Catalysts. Institutional investors are actively pricing in this heightened risk right now. The source document provides a clear timeline for upcoming volatility, starting immediately as the VIX pricing period begins. This leads directly into next week's major catalysts, the Jackson Hole meeting, which will anchor interest rate expectations, followed immediately by NVIDIA's highly anticipated earnings report, acting as the core pillar for tech stocks. Finally, let's round things out with Section 5, Sector-Specific Corporate Updates. Starting over in the semiconductor space, SK hynix has announced a record-breaking shareholder return policy. They're officially repurchasing and canceling 3.3% of their total issued shares, which is an aggressive move valued at $28.9 billion. This is officially the largest share repurchase in the history of Korean tech companies. Conversely, the space sector is experiencing intense downward pressure, with space stocks dropping 4% overall. This is tied to SpaceX's rolling secondary lockup expiries, which just released 319 million shares into a market that's showing weakened absorption capacity. And this pressure is going to compound as another 1.3 billion shares are set to unlock in November, leading to a full early shareholder release by December. Shifting gears to agriculture, John Deere posted a solid beat, securing $380 million in net income and an EPS of $5.10. They've set their full-year profit target between $4.75 billion and $5.00 billion. But the real takeaway here? Management is actually calling the bottom. They forecast that the broader agricultural equipment cycle will definitively hit its absolute floor in 2026. Looking at artificial intelligence infrastructure, CoreWeave has successfully secured a multi-year, multi-billion-dollar AI platform agreement with the quantitative trading giant HRT. This massive deal also includes a direct $1 billion equity investment priced at $109 per share, marking CoreWeave's aggressive expansion directly into Wall Street's financial institutions. Lastly, Futu Holdings reported a massive beat with $7.2 billion in revenue and $3.7 billion in net income. Yet, the stock suffered a sharp post-earnings sell-off as investors cashed out. The source document leaves us with a key question. Will Futu stock successfully find a technical bottom right at its short-term moving average overlap?